What's up, guys? JJ Fade 23. I'm just gonna go over a quick trade I took today. Pretty much using lotto puts on SPY, and I'm gonna tell you why I took the trade. All right. So, all right. Basically, you guys, as you can see, SPY has kind of topped out. We had a reversion to the mean. We have a major trend line here. It's been uptrending quite a bit. As you can see, when it topped out over here, pulled all the way back to this trend line. Well, this wasn't the trend line then, but below the EMAs, back to the weekly. Look, you guys, when it goes below the daily EMAs, then check the weekly EMAs. If it goes below the weekly EMAs, check the monthly EMAs. So look, big move up, reversion to the mean. That's the weekly 21. All right. So now it's possible if SPY doesn't get a hold of itself, it could come back to the weekly 21 again, especially since we have a breakout level right here. Right? But for now, we came back to, I also like to use the 50 on here. Exponential. Because SPY likes to go to the 50-day moving average, EMA, quite a lot. But point is, as you can see, came back. I like to judge the EMAs. We go a little below them, We had this major trend line here. But guys, why did I take a short on SPY? Okay. So I like to use supply and demand on SPY. Are we below the key daily EMAs, right? We're below the 8, we're below the 21, we're below the 34. Just only the 50 is that. Only the 50 would be below us today. So look, the daily EMAs are going down. The hourly EMAs are going down. And guys, look, this one didn't come back quite as high, but right here the hourly EMAs are going down. Also, the 10-minute EMAs were pretty much going down. They started to curl up today. But this shows that we're in a downtrend, okay? Current downtrend. Maybe not an overall downtrend because the weekly chart is going up. The big picture is still an uptrend. But the current daily and hourly and 10-minute is down. Now look, guys, I like this trend line for it to bounce off. We were talking about this the other day, taking it long off the trend line, right? So, especially because it was 1, 2, 3 days down into the trend line. But even if I think we're going to bounce off this trend line, why would I still take a short down here? Well, watch. Ready? As you can see, okay, look at when SPY made a big move up. You see what happens here? It has a lot of distribution before it starts to dump. It just doesn't go straight up and straight down, right? So now it comes down to here. Even if we're going to bounce off of this and go back up to here, it usually will still have an accumulation of something, right? It will have a consolidation pattern down here. So now look, like I said, now I'm planning on whether it goes up or down from here. I still think we're going to have a little consolidation here as it digests this down move. So hourly EMAs are down, daily EMAs are down, 10-minute EMAs are going down. Now what am I doing? We tried to pop up here, and look, guys, look how hard we dropped from here. A lot of supply came in at this level, all right? So I marked this level. I usually use a 15-minute chart. And I usually use it clean to mark my supply and demand zone. So, all right. So I marked this level right here as a level of supply. All right, just using that green candle. And now I also have a little trend line here. This could be a bear flag. I don't know if this is going to be a bear flag and dump. All I know is we're in a downtrend. We come down. We bounce off this demand zone here, back up to retest this supply zone for the first time. At that point, I have my 10-minute chart on. I switch to Fibonacci candles because it makes it way more easier to see. All right. I switch to Fibonacci candles. Now, as soon as this candle turns red in the zone, I got lotto puts that expired today, actually. And only from here to here was 100% gain because that's the power of lottos. You just got to be careful. You have to understand time decay when you're doing, especially at the end of the day, same day expire. Can't stay in it too long because it'll, each freaking hour that goes by, it's burning up the premium. So you got to understand how that works. You can't just be buying options. But it's the same thing as like right here, for example. Let's say, these look different when they're on hikes. That's why I only use them to enter and exit. But look, candle. Let's put the candles back on. All right. Let's say right here, you guys, look, this is a gap down and dump, but still supply, right? Because we dropped pretty big from here. We didn't have any huge candles. We didn't have any huge red candles, but that's still a supply zone. Now let's just, this didn't come into the zone, but if it did right here, and then you look, now you have your Heikenazis on, look at how much easier it looks to see. Oops, sorry. Look at this. Let's say that was the zone right there. Look, they turned red, you short. Boom. Now it comes back down to demand right here. And then Heikenazis turn green. Boom. Now, this is against the trend, even though we have the trend line there. I mean, I wouldn't be totally against taking a long off this since the major trend line is there. But in general, I don't long against the 10-minute EMAs, the hourly EMAs, daily EMAs. I stay on the right side of those EMAs because it's just like banging your face off the wall if you don't. But, you know, it's the same idea as this from the other side, right? This is an uptrend, right? Uptrend. You have, look at big, huge candles here. You have a big demand zone right here. And you come back down to this demand zone. You get the green hike. Sometimes you get stuff like this, you know. Nothing's perfect, you guys. Sometimes you get a green Heikenazzi, you go long. And this is the problem. People do this all the time, right? They get a red candle, they get a green candle, they buy it right here, they put this stop right below here, and they get stopped out. Well, your stop should be below the demand zone, okay? So that means even if you bought it right here because you didn't think it was going to quite make it, your stop should still be below this demand zone. People don't, so many traders don't realize if they just widen their stops a little, they'd be so much better off. Yes, maybe your risk reward suffers a bit, but it's better than getting stopped out all the time when you're not actually using the right zone. You can't take a long above the demand zone and then stop out above the demand zone, right? Be disciplined, wait for it to come into your zone. Then when you get the green candle, you go long and you put your stop below the demand zone. And then look what happens. Let's say you go in right here, let's call it 556.50. Risking $1, okay? 57.50, 58.50, 59.50. That's plenty of 60. That's a huge trade right there. Huge trade. Even if you got out back here at supply, as soon as you got another Heikenazzi turn color, right? So now you know you have your supply zone right here. So you stay in this trade, back up to supply, you get out when it turns red. Boom, that's a massive trade, right? So that is why I took the trade today. It's a basic, I call it show me the level and come back to it. It's really just supply and demand, following, using the EMAs and trends to keep you on the right side of the trade. Basically, show me the level means they showed you the level right here when they had a big drop from there and then come back to it. SPY likes to do that all the time. Just like right here. Show me the level and come back to it. Boom. So that's pretty much it. That was just a quick video. I mean, I could go on and on, but that's the gist of it. Thanks, guys.